7 days in a row in the green. Holy moly, talk about a melt-up phase. Every trading day last week, the SPY finished at an all-time high. It's hard to be bearish when everything is so bullish. Pretty crazy times. You're watching the Daily Stock Market Brief. My name is Michael Silva. We got a lot to talk about in today's show. We're going to be viewing over the indices. We're going to be talking about some indicators, some sectors, industries, commodities, the dollar. Let's get into today's show. Welcome back, everybody. We're going to start off with the market dashboard, the weekly performance. Take a look. XLK, technology led the way, energy at the bottom of the list there. XLK may have done well because what we're starting to notice here is that the 10-year, although it's been in this very choppy potential bull flag type of range here, it did have a weak last trading day, down 3.31%. Very interesting stuff as we're getting jobs data and then the unemployment rate ticked up. The bond market and the stock market are, it almost seems like one's going to be right, one's going to be wrong here. As you can see, the bond market, we're looking at the TLH, you can look at the TLT2, has been this bottoming pattern we were talking about quite some time ago, and we're starting to still continue to see this strength here. So, you know, it's a very interesting dynamic seeing that the market's pressing all-time highs, so equities keep on going higher and higher, but now the bond market is also pressing higher and higher here. So it's something to keep an eye on. If we start breaking through this 148, I mean, there's not much resistance up ahead. This thing could scream up to around 156, 157 rather quickly. So which one's right? I'm not too sure. Maybe the correlation is changing somewhat, but, you know, really the bond market since March is really kind of topped off, and the yields kind of have just been crossing lower and lower. Very interesting stuff so far. We'll continue to monitor this and watch what happens. As the 10-year goes lower, it has been very beneficial for the tech sector. Let's hop into some indices. SP500 on the daily time frame, still very bullish context above all of its moving averages. A couple things to note, we're now above the daily upper Bollinger Band, so it's getting a little overextended. That also pairs in well there with the RSI at 71.9. It's considered overbought. Just know that it can stay overbought for quite some time, so this could be an early stage breakout where we push out a little higher and then pull back. We'll see how that plays out. Any sort of pullback going into next week will probably be some sort of a gift opportunity to potentially buy those dips, as long as you're managing risk very carefully here in this environment. Let's go into the 15-minute time frame. We have an inclining 5-day moving average. The PMO, a new indicator that I'm bringing on here. I'm not going to get too much into detail on this specific episode, but I do like this. There is a bearish crossover taking place right now, but it is still above zero, and it's above a 5-day inclining moving average as the RSI is very overbought. So you'd want to see this take a little bit of a breather. We do have some supply or some demand zones, I would say anywhere around 141 to just where this gap fill is. So this little zone in here could be a potential opportunity to buy those dips if you're trading the SPY. And then we also have the 5-day inclining moving average right around 428. Now, if it starts breaking down even stronger through those levels, we can look lower at this volume profile, which is right at around 421 to 423, that kind of zone right in there. I don't necessarily know if it's going to be falling down there, and if it does, you know, we might see a very aggressive move. So you just want to be prepared, because those type of moves, you'd want to wait for it to actually start seeing some strength. But once we started seeing some strength on a significant move to the downside, those would be the opportunities to potentially buy those dips. So keep an eye out for those. Dow Jones Industrials trying to reach out to its all-time high. It's coming into this little band of resistance and the upper Bollinger Band, so just take note of that. This move was a very strong move right at around, where was this, 33,200, and now we're trading at 34,786. So very, very strong move in the last recent weeks of trading. And you can see we have some resistance right up ahead here, and then we had this previous all-time high candle that reached an all-time high. So we are, you know, right in that range here. You might be able to draw, you know, a diagonal trend, down sloping trend line from up this corner down to here through this, and it looks like it might be actually potentially breaking out of what could be a bull flag. But, you know, I'm more of a fan of the horizontal areas of support and resistance. I do use trend lines that slope, but I am more of a fan of looking at for areas of supply and demand, just horizontal areas of support and resistance. So it's coming into that area. The upper Bollinger Band is trading right around 34969. So that's an area to watch out for. The DIA on the 15-minute time frame. So this is the Dow Jones Industrials ETF. PMO did cross over, so it's bearish. It's still above zero. You're going to notice this trend on the 15-minute time frames on a lot of the charts. Slight divergence on the RSI, but it is overall still in bullish context. So, you know, this area 345 probably would be that zone of support. We have previous resistance, 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 and then we have the 5-day inclining moving average right there too as well. So that could be, you know, great opportunity potentially if we do get pulled back into that area. We could very well see some sort of a move pass. We could see some sort of a move bounce from that level. Sorry. Qs on the weekly time frame. I'm going to show just one weekly time frame chart this time around. The Qs are on a weekly time frame. They still do suggest that they can potentially push higher here. However, just note that the weekly close was on the above the upper Bollinger Band. So the upper Bollinger Band is at 357.05, and we closed at 358.64. So it doesn't happen frequently, and sometimes when we do get those closes, for example, right over here and over here, you can get, you know, pretty significant moves to the downsides or some sort of correction. If you look at the ARK ETF right now, it doesn't look like the greatest position to go long in, so it might need some time to digest, and that digestion could come through price and or time. If you look at the volatility index of the NASDAQ here, VXN, right at its lower range here on this little area of support too as well. So it's something to just be mindful of. Then we have the NDX on the daily time frame, also pressing the upper Bollinger Band. So that's both the weekly and the daily, and the RSI is at 75.48. Remember, the RSI can be overbought for quite some time, but just know that, you know, this is a very, very strong move. Typically, when you get these very, very strong moves, you want to see them digest, whether it's price or time. Time we would say it's going to be consolidation, so it can turn into a bull flag or it can consolidate sideways. Price would be a correction to the downside, potentially a very strong move, and then you'd want to look for areas of support. An area of support would be right here at these previous walls of resistance, which matches up with the 20-day moving average. The 20-day moving average is right around 14,203 on the NDX. If you look at the Qs, inclining 5-day moving average, very nice sloping, boom, all just like from the bottom left to the top right. Price percent oscillator looks like it's going to cross over to bearish. I would start looking for potential digestion of gains right at around 355. Yeah, I would say 355 to around 357. That kind of zone in here would also fill the gap, and then also would pull back right into the 5-day moving average, the inclining 5-day moving average. That could act as another level of support. Then you can hold tight stops. If it goes lower than that, I would start looking at these volume profiles down here, these big spikes. And that's right at around 344, that zone right in here. So 344 to 346 in here. So we'll keep a close eye on that as well. IWM on the weekly time frame, these guys got hit fairly the hardest, and it's coming into this just supply zone. So there's not much to report here. It's really just been consolidating, and wherever this resolves, chances are we're going to probably see a pretty significant move, whether that's to the upside breakout point or if it's going to break down to the downside. So right now, I mean, I'm keeping a close eye. I would imagine that it's going to resolve to the upside because it would be following its trend. But if it doesn't, well, then you want to just make sure that you're prepared for that. Also to note, the Bollinger Bands are tightly contracting, and that could result in what's known as a Bollinger Band squeeze. So we'll keep an eye out here at the upper range of resistance, and we'll keep an eye here on the moving averages and the lower Bollinger Band. So you can see the lower Bollinger Band pairs right there with the 50 and the 100-day moving average. So let me see here. Is that the 50? Let me see, make sure. So yeah, that is the 50 and the 100-day moving average with confluence with the lower Bollinger Band. So if a tag in that area, which is right around 224, if we come down into there, that can present itself as a probably really good opportunity to go long from a risk versus reward standpoint. We've been seeing this rotation kind of all over the place, right? We've been seeing small caps into large caps. That was, you know, what's the theme of last week. So large caps really took a big rip, and then we're seeing these small caps and speculative names start to get hit hard. Now, small caps typically sometimes what you on big trends, you can follow them, because if small caps start deteriorating throughout time, that could be actually an early warning sign to the larger equity market. So we'll monitor that. But like I said, there's a lot of divergences here in the market. We've been talking about that, and divergences, they can play out for months, and they might get resolved where they don't matter anymore. It's just something that we need to be mindful of. If you look at the 15-minute time frame for the IWM, you can see here it's just been sideways action completely, and then the 5-day moving average is declining short term right here, but it's relatively just really flat. Price percent oscillator, sorry, not price percent oscillator, the PMO is below 0, and it looks like it's going to be a bearish crossover, so that's not the greatest sign there as well. This gap right here would be something to keep an eye on, but just notice there's not much volume beneath us. There's more volume right here where we're at, so it'd be nice to see the IWM get back above 232. Would be very nice. That would be, I would have more confidence of going along there. However, if we get right above 230 and get back above that 5-day moving average, that would also be good. Just know if we go in at that entry point, we still have supply right up overhead. So if we get above 232, that to me looks pretty darn good. Let's go into a couple indicators. Just going to go over a few that have my eye. This is the XVG, this is the value line geometric index. This is important to track along with the other indices. You want to see this resolve to the upside to match in with what's going on in the SP 500 and even the Qs. You can see here there is clearly a negative divergence taking place where the value line index has not broke out to all-time highs, and the S&P 500 as well as the Qs have broke out to all-time highs. So you want to see that resolve. Overall bullish context for the XVG, so it does seem like it will resolve to the upside. This is something very similar that took place before the pandemic crash, so it's something to monitor. Like I said, overall bullish context, and it can still resolve to the upside, but it's as the market's pressing higher, we're getting these overextended readings. This hasn't even confirmed, that these moves. It's a little bit of a concern for me, but I'm not going to read too much into it. I'm just going to follow that price action. Meanwhile, the VIX on the weekly time frame here, this formation, this construct of a falling wedge here, this technical pattern is still holding very well. You can see it's been tagged multiple times on the lower trend line, including the last 2 weeks. We still have 2 gaps below us, and this could take a long time to resolve itself, but this overall kind of just compression pattern can very well surprise us at any time, and we could get a shock to the upside. So it's something to just be mindful of. Like I said, you don't need to put too much weight on any of this at this specific moment. The VIX this week had a low of 1410. We talked about that on the previous market brief, saying that it looks like we could potentially just get down to a 14 handle. Well, we got down to that 14 handle, which is the lowest we've seen in quite some time. So, like I said, it's as the market's pressing higher, it's hard to be bearish, so we look for long setups with good risk versus reward trades, but you just need to be mindful of all the various divergences. I can tell sentiment out there is just getting very, very bullish to a high extent, but also the level of complacency that I'm seeing out there and the rush to try to make more money is a little overwhelming from what I have been seeing. Now, I'm just one small market participant. I only got 2 eyes, so my view of everything is smaller. It's not a full driven market, but it is still something important to call out. And then if you look at breadth, we're looking at the NYMO, just it doesn't exist right here as the market's pressing these all-time highs. Let's go look at a couple sector and industries. Here is the transports. Now this is also very important to watch, and what you'd want to see is this to continue to start moving in the upwards direction. We've been seeing transports diverge from the indices and including the industrials. And if you go way back and you start reading on Dow theory, you'll understand why it's very important to see the transports move in conjunction with the industrials and even the S&P 500. It's a good, way to gauge the overall economic behavior. And if the transports continue to break down, but yet you're seeing the markets press higher and higher, that is a divergence that continues to build and build. As it stands now, they've been just going sideways, so that's not the worst thing. The PMO here is still trailing down, and it could very well cross below 0 if this doesn't resolve itself. But this could be a basing type pattern here. Let's see if we can get back above 1508, basically 15,100. We'll just call it. We'll round up here. But yeah, as it stands right now, the 5-day moving average, it's flat, but the price is above it, so it can start inclining here soon. And we do have a lot of volume kind of just within this area. So if we start breaking out of this top end range is 15,100, perhaps that is the driving force that we need to press higher, but it just hasn't done so yet, and that is just a little bit of a warning sign to keep close eye on. Let's look at semiconductors now. Semiconductors have been very bullish on a weekly time frame. They broke out to all-time highs, and it looks very solid. This right here could be just a period of digesting gains, so nothing too much to read into as this little pullback, and now it's kind of going sideways. The 5-day moving average is still inclining. Can it go lower? Well, the PMO here suggests that, okay, it looks like it might want to do a bearish crossover, but we might get a gap up, go to start tomorrow. So if we start getting price back above 260.45, that to me is a very bullish sign. And then if we got above 262, it's even more bullish, in my opinion, for the semiconductors. So we'll continue to just watch and see what happens with all of that. Financials have been trending sideways here. If you look at the 15-minute time frame, the PMO here is just right above zero. Looks like it's a bearish crossover, but it's, like I said, it's still above zero. It's not giving us much data as far as price. We have a lot of volume up in this area. What you want to see here is the price get above $37. And if we start getting above $37, that can be very positive for the financials. Now keep in mind, the 10-year has been struggling, right? The 10-year yield, if you look at the TNX, it's been going down. What you want to see with financials is when you see the yields, the long-term yields rise, that's good for the banks. That's good for individual financial stocks too as well, because the banks, they borrow short-term, they lend long-term. And the higher the yield goes, the more margin that they make. So you've seen that correlation we pointed out multiple times. Right now we're looking for a break above 37, and this could be very well a potential ascending triangle right here. If we start breaking below this 36 range, 36.50 range right throughout here, I would start looking into potentially 35. You can see there's a little bit more of a volume here, and we have an open gap. I don't know if it's going to go down there next week. That's a pretty significant move from 336.34 down to around 335, but we'll see how that kind of plays itself out. Next one is communications. Communications, both from a seasonality standpoint, has been a top performer in the months of July, and then also from a relative standpoint, it does look very good as well. This looks like it needs to digest its gains slightly here. Negative divergence on the RSI. PMO crossed over to bearish, still above zero, and it's above the 5-day inclining moving average. So I would start looking at around 81.60 to around 81.25. This area could act as a level of support, so I'd start looking right in this zone. If we get a little bit of a pullback, that can offer up a great opportunity to potentially buy into that dip. This little area of resistance right here, so 81.50. Yeah, 81.50-ish. You can see that this could have been a little inverse head and shoulders, and from a low of 80.68 to a neckline of 81.38, that little move right there would have taken us to a full measured move of this where we're currently at. So perhaps we do take a second to digest those gains, come down a little bit. But like I said, the futures market, I think they're up right now as it stands, so we'll watch that. But look for some sort of digestion and gains, and the opportunity would be in those small pullbacks. XLRE also does typically really well from a seasonality standpoint and from a rotation standpoint. We've pointed out on previous episodes that they do typically well as well. This price action, though, it's been going sideways since June 17th. We haven't really gone anywhere. We are above the 5-day moving average. However, it is flat. So as far as strength in either direction, it's relatively flat. So the price action is digesting right here. PMO, bearish crossover, still above zero. I think we need to start getting above 44.80 to 45. I would say 45. This could be a little inverse head and shoulders. I would say then the neckline, if that was the case, would be above 45, and then that could take us up higher. But we're just not there at this particular point in time. Let's hop into a couple commodities. Gold hasn't been giving us much at all, but what it is nice to see is that the price has been holding up as the dollar has been pressing higher. That's never a bad sign. And if the dollar continues to get weak, that can be very good for the price of gold. Price percent oscillator here at the bottom looks like it wants to start doing a crossover, bullish crossover, but it is still above zero. So we'll continue to just watch what takes place here. I was hoping to see a stronger move to the downside. We didn't really get it. We do have a positive divergence there also, though, in the RSI. So perhaps this little FOMC meeting shakeout was all that was. It was a quick shakeout to potentially continue its trend up. But I just say be careful if we start cracking down through 1760, because that can really just bring us significantly lower. Bring us to go test these lows right around 1680. Silver holding up decently well too. We broke down through this little channel. The FOMC meeting came, right? We saw that little shock to the downside. Price percent oscillator looks like it wants to do a bullish crossover. And, you know, the last day of trading wasn't all too bad, but we're still below the 20-day moving average, below the 50. So we have some time. We have some time to repair this so far. Overall, though, if you look to the left, I mean, we haven't gone anywhere for quite some time. It's just been consolidating. So it's going to be interesting to see how this resolves itself. I have silver, so I wouldn't mind if we start breaking above 30, obviously, but I wouldn't also mind, because they're long-term holds, if we get a significant move to the downside to be able to accumulate some more. Oil has been just on a monster tear as of recently, inside trading day on this candle, so start to look for a breakout above the previous day trading high, which could be a very bullish sign. A breakdown would not be the greatest, but it's overall in very, very bullish context here. You see the price percent oscillator relatively flat, but it's still above all the moving averages, so we'll continue to see what develops here. If you take a look at copper, this looks like a potential opportunity if we get these confirmations, but you can see when we've had these downsloping trend lines like this, and then we had the price percent oscillator cross over to bullish, we've had some nice runs. You can see here, boom, crossover, we saw a nice big run, crossover, boom, we saw a nice big run. Now we're starting to trend down. The only difference between those three and right now is the price percent oscillator crossed over above zero, we're below zero, and then 2, each time that it happened was at the 50-day moving average. We are sitting right here at around the 100-day moving average. So, you know, I don't know if you want to put too much weight on that, but I would start to watch to see if this does get crossed over, if we start getting back above the 20-day moving average and either the 50-day moving average. If the RSI starts getting above 52 as well, that sounds to me like it would be a very good opportunity to start looking for individual copper plays. Here's Bitcoin. A chart of Bitcoin hasn't been giving us much as of recently. It's been chopping around. We really need to see a decisive break above this previous couple swing highs or a breakdown below this 30,000 range. Until then, it's just trending sideways, building itself a base. Hey, perhaps, you know, it's very hard to determine what will happen here. It is in bearish context. It is, and in a bear market because of how it broke down and it's below its moving averages. So, you know, it could take some time to repair as per usual. I'm looking for a potential break above the 40,000 because that to me would signal, as of right now, would signal a buy signal on this Sailor to shift ratio that we put together. If it starts breaking down lower, I'm looking at around 26,000. I found that level from using an anchored VWAP from an older location, which I can go into a different video. But so I'm just watching out because this is just in sideways action. I don't have the setup yet, so I'll continue to watch to see if the setup comes. Let's look at the dollar. The dollar from a weekly time frame could be an inverse head and shoulders in the neckline right here. You can see this last week. Bam, we tagged it perfectly, and then we started heading just slightly lower. If we start breaking out of that, I mean, that puts the dollar right at around 96 to 98. Which would be a pretty significant move. Now, that would put a lot of pressure on gold. That could put pressure on the equity market. So we'll see what takes place with that. All right, everybody, that's all I have for you on today's episode. Just to quickly recap, it seems as if the market wants to continue to press higher. So any sort of small dips, look for potential opportunities to buy. We talked about that in the 15-minute time frames. Those can offer up good areas of support, those little zones, and then those volume profiles that we kind of mentioned. I'm looking at some individual real estate stocks, so I've been posting some of those. I'm probably going to be pressing to the side a little bit on any individual technology names going into next week because there are some clear overextensions, and I'm seeing a little bit of bearish chart behavior on like the ARK fund. So individual names that trade in with the ARK fund, I'd probably be a little bit hesitant going into as far as next week goes, but perhaps that some sort of a dip would offer up an opportunity. So like always, be very careful trading. Don't feel forced and rushed to make any money in the markets, especially given the current context of the markets. You need to just be very tactical and very diligent with managing risk. That's all I got for you on today's episode, everybody. See you later.